Hello, everyone. Thank you for listening in on today's webinar, What You Need to Know About VAT When Importing to and Dropshipping Goods Within the EU. We are excited that we have over 100 listeners on today's webinar, listening in from all over the US and Canada. My name is Daniela Trepto, and I am the marketing manager here at Eurovat Refund. Our speaker today is Britta Eriksson, who is the CEO and founder of Eurovat Refund. Britta is today one of the most knowledgeable value-added tax experts within the United States, frequently informing and working with tax managers within small to medium-sized companies, as well as Fortune 500 companies, the United States Department of Commerce, Revenue Canada, and many of the European embassies, consulates, and trade offices in the United States. Today, she will share her expertise with all of you. And now over to Britta.
Thank you, Daniela, and thank you everyone who is listening in today. So as Daniela mentioned, this will be about value-added tax when you import to and drop ship goods within the European Union. So the quick overview of today's webinar will be a general introduction of our company, Eurovat Refund, then explanation what is a value-added tax as opposed to sale tax mostly, how does it work? VAT on shipments into the EU, when you send from US or China into the EU, what happens? VAT registration for North American companies when it is required, how VAT works. Then we have VAT on purchases and sales within the EU. If you purchase something in Germany, for example, and ship to the UK and so forth. VAT on e-commerce of goods, and VAT also on digital services sold. And finally, be VAT smart and seek advice before you change. And then we open up for questions in the end. So Eurovat Refund, our company is located in Los Angeles area, and we were founded 1992, quite a long time. And our expertise is within VAT complex issues. It can be VAT reclaim on VAT you have incurred on business expenses in Europe, but also VAT registration, compliance and management when the company import VAT, drop ship, does e-commerce and events and so forth. So VAT, what is a value-added tax? Well, your listeners from Canada, you will know that the VAT works as your GST in Canada for the most part, except for Europe, it is a connected system between the countries too. Otherwise, it works more or less like in Canada. For listeners from the United States, VAT is an implemented tax in almost every country in the world except US and a few other countries at this point. And it is different from a sale tax. As you know, a sale tax in the US, a company would only pay on things they buy to use, for example, office furniture and office supply. They do not pay it on things they will buy to resell. For example, a computer company who buy computer parts for resale do not pay sale tax on that. When you do have to pay sale tax, for example, on your office furniture, it is a cost to you. You cannot claim it back. When you sell within the sale tax system, also you only charge VAT when you sell to the end user, not if your customers is going to resell it. VAT doesn't work like that. A value-added tax is paid on everything. So, for example, a company in Germany, they will pay VAT on absolutely everything they buy, including things they're going to resell or not. And it is almost to 100% refundable to them. So first they pay it out to the vendors, and then they go back and they claim it back. You get it all back from the tax authorities. When they sell within their own country, such as within Germany, or for example, Canada sells within Canada, almost always have to charge VAT to your customer as well. Doesn't matter if they're going to resell it or not. But in the end, it only actually adds up as a cost to the private person who buys it in the end, never to a company, even though they have to pay it out and charge along the way. The VAT is called different things in the different countries, so please be aware if you are trading within any of these VAT countries around the world. VAT is there. It's something you have to deal with if you trade within, not if you ship a goods, an export where the customer takes care of everything, but if you, for some reason, have to own a product within these countries, VAT is a tax. It's called, for example, VAT in UK and many other countries. Canada and Australia, they call it GST. Germany and Austria call it MWST. France call it TVA. Italy, IVA. Japan, JCT. And the rates can vary from 8 to 27%. Actually, in Canada, it's only 5%. In Europe, it is around 20% mostly. Can vary from 17 to 27%. Count on about 20%. So if you do not know how to handle this, it can end up as a cost to you, and that is a lot of cost. So it's better to do the homework before you start to trade so that you clearly understand how you can claim this back. It doesn't become a cost to you, and at the same time, you are in compliance with the local laws. The European Union, I'm sure you heard about, the EU, consists of 28 countries in Europe. Not all of them belong. For example, next to France, between France and Austria and Germany, you have a white spot that is Switzerland. And up next to Sweden, left of Sweden, you have Norway. They do not belong to the European Union. However, they also have VAT, but this is not a connected system. When you look at the European Union, you can, in terms of trade, you can say that it really works like the United States. First of all, it's a custom union. So when you ship something in to Europe, you clear customs only once to the first country where it arrives. So, for example, if you ship something to the United Kingdom for distribution in EU, you clear customs into Europe through the UK. This is where you pay your duties and customs, first of all. And in addition, 20% VAT is added to your products right there. You can then sell and trade these goods within the European Union without having to go through any more customs or duty. But you have to look at the VAT rules. So this is just the same as you trade in the United States. If you import something from China or Europe to LA or Atlanta, for example, this is when you clear customs and pay customs into the United States. Then you can ship around and sell these goods in the United States. But again, now you have to look at the sales tax rules that, as you know, are kind of the same but also different. The EU VAT rules are ruled by the European Commission, and the EU countries have to follow them to about 80% for the most part, but they can to a certain degree implement local rules as too, and they really, really do. So even if the basics are the same, there can for sure be differences in these countries still. The countries are also connected in the way that they do compare notes, so to speak. So, for example, if a company in Germany sells to a company in France, maybe the German company will be audited by the tax authorities, and they see there is a sale to France. They can then contact the French tax authorities and ask if the French company has reported this purchase from Germany. So all transactions, purchases, sales between all these companies within all these countries has to be reported and handled from a VAT point of view. Also, of course, I forgot to mention that United Kingdom, as you know, of course, is about to leave the European Union. We call it Brexit. It's supposed to happen next year starting, and we expect the VAT rules to change by 2020. But at this point, it's not known how. We just know it's going to change, but we do not know how. A lot of American and Canadian companies, they go through in Europe through United Kingdom. And we assume that will change because now it is not an entrance to Europe any longer. And that really is too bad in a way because UK is an excellent country to go in through for many reasons. That will change, and we will keep our everyone updated as soon as we hear and know something about this more in detail. So VAT to shipments in the EU from, for example, North America. they can run into a VAT surprise often. They don't know about this. For example, the U.S. company that agreed to be the importer record to the European Union, normally when you ship something to a company in another country, you let them be the importer. You would just ship the goods and they have to import. But sometimes you have to be the importer for one reason or another. For example, you have to warehouse it there, or you have a big product coming in, so you need to keep it for a while, or you sell through e-commerce through any other platforms in Europe. Then you will get this VAT charge from customs, first of all, sample to your warehouse in Europe before sales. And this is pretty common when you sell e-commerce, for example, through Amazon. You can ship into the warehouse in UK, Germany, Italy, and warehouse it and sell on the website. That also means that you first have to deal with the import VAT, and then the consequent sale that requires registration. Also, sample 3, the U.S. medical device company, they often have to also store in Europe or be the importer. The reason is that their customer can be hospitals and clinics, and those customers are not used to import from countries outside the EU. They don't really like to do that. They rather buy locally, so to speak. Therefore, the medical device company might be also required to be registered. Or you have, for example, sample 4, a computer company that ships in warranty products, or sample 5, e-commerce, when they ship directly from their warehouse in the US as well. And do note that in Europe, a very, very, very good thing is that you can, as a foreign company, register for VAT only without having any establishment there. That is usually possible if all you do is selling and shipping products. You do not have any people on your payroll. You do not have any offices. If you have that, it often requires you to also form a company there. But otherwise, for the most part, with exceptions, it is possible to be registered for that only if you ship around products. And that is a really excellent thing in the European Union. So VAT registration for the North American company is often required. For example, if you have to act as the importer, you have to warehouse in Europe, or you sell within the EU, including e-commerce. Also note that sales of online services to private individuals in the European Union, for example, you are in North America, you sell software, cloud services, online games or something, or you stream something that they have to pay for. Then if you do this to companies, that's fine. You don't have to think about any taxes, generally speaking. But if you sell this to private individuals, then you do need to register for that and charge VAT. This is only if they are buying directly from you. So that means that they are paying directly to your company. If you're selling through any online stores, that means that they buy on an app in an app store, for example, then the store will take care of this for you. But if they are buying from you directly, this is a requirement. So do keep that in mind. Also here, I want to mention that Russia just took a law. So from January 2019, they require every company that sells online, also to business in Russia, to register for that in Russia and start to charge 20% Russian VAT to companies. This is a very new thing. It's a very disturbing because it is not required otherwise else if you sell to companies. So we are just starting to register our first companies for that, and we'll see how that goes. It's new to everyone, but it is a disturbing trend, and it can happen in other countries as well. So whatever you sell to any international company, please keep the VAT in mind and do check if there is any issues. The VAT, for example, on online services, we expect to change, and more countries will require it. So how does that work then? Well, I mentioned a little bit, but basically how it works, for example, for a company in Germany, is that when they sell in Germany, they do need to charge that to everyone. It doesn't matter if it is a reseller or a private customer or hospital, they do charge VAT on everything. They also pay VAT on almost all purchase invoices, including things they're going to resell. Also on services. So, for example, a computer company will pay VAT on all products they buy for production, their marketing costs, their legal costs, their accounting firm, their marketing firm, office supply, and so forth. And then in the end of the month, they declare the difference to the tax authorities. They basically say how much VAT have we collected from our customers. And against that, they deduct all the VAT they have to pay out to the vendors and the difference they pay in. Or they get a refund if they 1 month have paid out more than they have collected. So that is to be counted on a balance account, and it should never be a cost in the end of the day. So it's different from a sales tax. Keep that in mind. You guys from Canada, you understand this. It is the same as a GST. So what happens when you send a product to any of these VAT countries around the world? This is not only to Europe, it is to any country. So keep in mind when you send it to South America, Canada, Australia, New Zealand, Africa, Asia, and Europe, pretty much every country. What happens is, for example, if a product is imported to Germany from US or China, a commercial invoice goes with the product, of course, showing the value. Then the local custom will assess duty. Usually that is 3 to 5%, and we all know that that is expected. So duty has to be paid to German custom upon import. Then, in addition to this, then the German customs also will ask for 19% VAT. That also has to be paid to German customs before they release it. So keep in mind, the duty we all know, and we counted it. It's not a whole lot. For example, in this sample, we say they ship for 100,000 euro. Duty is 3%. That is only 3,000. We know. But then they do put on VAT. And in this case, it will be 19,570. That's a lot of money. So this is not a problem if you sell from North America directly to a customer in Germany, for example, and they are the importer. They understand that. They expect to pay VAT to customs. They go home, they register for VAT, they just claim it right back. But it is for sure a problem if for any reason your North American company decided to take this on. All of a sudden you get a charge for this much money, and you have to be prepared so that you are set up, so you know what to do, how to handle it, so you are in compliance, and also you can get back the 19,000. VAT on purchase and sales. Now we have this German company again. So we say that in a month they buy for 10,000. They pay 1,900 in VAT to all these vendors for everything, goods, services, travel, marketing, everything. So they pay out 11,900. Again, keep in mind they book 10,000 as their cost. The 1,900 goes into the balance account for VAT. They sell to German customers all over Germany, private people, companies, hospitals, organizations. This month they charge 150,000 euro. They charge freight. They have a net price, and they have to add on 19% VAT. So they collect 179,000 in this sample. And so they booked, of course, the VAT books into the VAT account, and the rest is booked into the revenue. So then they declare this to the German tax authorities. So this sample, the German company had collected 28,000 in VAT from customers. They had paid out 1,900 VAT to their German vendors. And then they had an import from the US where they had paid import VAT of 19,000. This they can also deduct. So for this month, they owe 7,200 to the tax authorities. VAT on e-commerce and goods. So you can have this two ways. If you are e-commerce, for example, in the US, and you sell from you ship it from US, this means that you have a website. People all over the world places an order to you. When you get an order, that's when you pack it up and ship directly. For example, Judy in London, she orders something from you. At that point, You go to your US warehouse, you pack it up for duty, and you ship it directly to duty. Then you have to keep in mind how you do this, because that will be VAT and duty when it comes to the border in the UK, at least if the value is more than about $20. So how do you do that? Well, you have to really think this through, because there are different ways to set it up so that you keep your customer happy and that it works for you as well. Most private people around the world are not very happy about getting a call from customs if they have ordered something online and the mail office or customs says, well, here is your goods, but you have to pay another 30% in duty and VAT. Even if you do tell them that, they usually don't really hear that. So it is a problem for them. And when you do that, it can often happen that they just refuse to take it. And then all of a sudden your goods is stuck in customs and it becomes very burdensome. So then you can, for example, sign up with a vendor like perhaps FedEx, UPS, and they can clear customs for you and send you the bill. But that requires you then to add on this price at the startup when you sell it. So you have to think this through. If you sell international from US, please do keep in mind that the VAT and duty that can add up to 30% is added at customs. So somehow you have to handle that so that you make sure you don't lose all that money, and also that it's convenient for your private person shopping, so that they do not end up refuse the goods because they, even though you did tell them, they still didn't hear that they actually would have to pay more when it came to customs. There are different softwares available that you can use where you can go in and say, okay, I'm shipping now to Chile or Europe or somewhere, and they can pretty much tell you how much the VAT and duty is. That is excellent, but you still, again, need to make sure you get paid from your customers in a good way here. On the other hand, if you have e-commerce and you sell, so you have to import into Europe and then sell it on. For example, you sell on the Amazon fulfillment warehouse in Europe. That means that first you ship in your own goods, put it in the Amazon warehouse, for example, in the UK, and then sell on. That requires you to register for VAT in the UK, and you have to do the import into the UK under your company name so that you are clear on that there will be VAT and duty. You pay it, but you can claim it back. You must also charge VAT to your customers in the EU. And here, for example, when you do have websites in Europe to private people, the price should state it including VAT. So when you go in and state your price on the website at Amazon, for example, you have to state the final price. So, for example, if you only get charged 100 British pounds for a product, that's what you want, you have to state 120 British pounds on the website, because that is how much your customer will pay, and that is what you will receive. So you got 100, and the 20 you have to count for VAT. It doesn't work like in the US where prices are stated net, and then the tax is added on later. Like, for example, if I shop in a store, it does not work like that in Europe. Private people are used to seeing the price including VAT. It is also required usually by law, and that's what you have to state and understand as well. And then if you have, for example, Amazon, then they do send you the money, including VAT, and they also send you a VAT report. So it's pretty easy to do the VAT declaration based upon that, but again, be aware. Also here, I want to mention that it's going in effect pretty soon within the European Union that they are going to make the warehouses responsible for the VAT too. There is so much fraud in Europe going on right now where foreign companies, like particularly Chinese companies, they do not register for VAT, so they really are not in compliance, and the tax authorities are losing a lot of money. So therefore now to enforce this, they will make the warehouses responsible. So that means, for example, the Amazon fulfillment warehouse in UK will be responsible to the tax authorities in UK to make sure that all the merchants they have from outside Europe really, really are registered for VAT and pay in the VAT. So that is a change to come, and it's going to be interesting to see how it plays out, because it's a big burden on these warehouses. So, and it's a little bit hard for them to do. So we are not 100% sure how that will work, but it is a demand that they will have to be responsible for making sure that the merchant is VAT registered and also declare the VAT. Then again, I want to point out the sales on digital services to private individuals in the EU. And now, for example, as I said, Russia, also when you sell to companies in Russia. So we have something called MOF, and that means that the foreign companies, such as a Canadian, US company, who are selling into private people, digital services such as software, cloud, online games, music, broadcast, and so forth, and the private person is paying directly to this Canadian US company, they do need to register for that. They can register for that in one country, for example, Netherlands. And then when they get orders from the private people in Europe, they have to charge that according to that country's law. So, for example, a sale to Netherlands, they need to charge 21%, sale to UK, 20%, sale to Hungary, 27%. Then they declare all of this VAT to the Netherlands, so that's pretty easy to do, and that is requirement. So again, the prices goes up to your customers 20%, and this is a requirement that you have to comply. And here they are also getting more and more and more. There's a lot of fraud. There's a lot of companies selling in without being registered, for sure, but it is a compliance issue. And companies that call us and ask, will I ever get caught? It's like, that can happen because now, first of all, they are searching for these firms a lot more from Europe. Also, you need to keep in mind that if you ever want to sell your company or go public, this is for sure a due diligence issue. So the people who will go in and take a look at all the finance and compliance, they will notice that you have behaved illegally in Europe in these sales, and that, of course, will be an issue. So this was a kind of some samples what can happen and what you keep in mind. But of course, my main point is that as soon as you go international, please check on the laws there, because it can really put you in a situation where you need to be compliant. And if you don't, you are, of course, breaking the law. That's not good. And also you will lose 20% in VAT in your cost, and that is also not good. So it's essential that you assess your VAT problems before you start. And your VAT, for example, you can absolutely contact us and say that, I have this and this issue coming up. And usually, not always, but usually we can at least give a brief outline of the problem and the issues we can see right up front with no charge. So where it's heading. And then we'd be happy to assist you to make the final assessment what that really means in terms of VAT, and also help you if you have to register for that and so on and so forth. So that is what we are. You need to be VAT smart. You also need to be VAT smart in terms of dealing with your customers and vendors. So, for example, in the contract, it has to be clear that the VAT is addressed in a correct way. For example, if you deal with a customer or a vendor in Europe, or Canada for that part, they already have the VAT addressed, and they can always cover themselves. So you need to be sure to do the same, and you need to make sure that you understand what it says in these contracts in terms of VAT, so that you can match that and be equally compliant, and also make sure that you also can claim back the VAT. Because in the end, that should never, ever, ever, ever be a cost to any company at all. It should only be a cost to the private person in the end. And with that, I thank you very much for your time, and we'd be more than happy to hear from you, and feel free to contact us anytime you have questions, and we can certainly assist. Thank you very much for listening in today. Bye-bye.